Hey everyone, JPA Trades here with the Roku breakdown video that we got the likes requirement for from Twitter. So just wanted to say thanks everybody for kind of always showing up and supporting, liking, retweeting on Twitter, and then a special thanks to all you guys here on YouTube now. I think last video had like over 200 likes, so that's like crazy. So just want to say thank you very much. Keep smashing the like button, keep commenting. I really appreciate all you guys kind of do to keep the channel engaged, keep it alive. Really means a lot. And without any further ado, let's get into the video. So last week we took Roku 170 puts on Thursday during this run up right here. So here's our timestamp. So 11:02 a.m., which just so happened to be right at the high of the day. So a lot of people ask, well, how'd you time that up so well? What did you know to make that event occur? So a couple of factors came into play here on why we wanted puts. So first of all, overall sentiment of the market was still bearish. There was a lot of selling going on during the week. There was a lot of, let's say, doom and gloom clouds looming being overhead. So there wasn't a ton of reason to be buying. And this crazy run up here in Roku didn't quite line up. And then if you go just back in time to last Thursday, you'll notice this candle right here. So up in the upper, right up here, just look at this number when I go over the candle. So the high of that candle for Roku right open was 179.71. If you notice where we took our puts on Roku, 179.68. So I think I might have had like 1.6 was the buy, but essentially I was like sitting on 179.5 for that repeat of the sell. So once that level got triggered, I had my order in. I was ready to go for that sell-off to happen. And another reason that I thought the sell-off would be possible, I didn't know it would be to this extent, but I did know if you look back at just the SPY chart as well, same thing. We were getting right up against 460. I mean, we were still kind of far away from 460. We were about 459. But all those tens we really like to kind of bounce off and have trouble with going under and have trouble with going over. Not so much under, just because the market's really sold off these last few days. But the tens have kind of been at like, it's the psychological level. Like everyone wants to pay like exactly $100 or exactly like that perfect zero. Like the perfect zeros, people tend to like to buy and sell off of. So just kind of keep that in mind. So we had SPY going with us with another repeating top. We had Roku going with us with that repeating top. And we also had Netflix's earnings, which caused this massive sell-off on their miss. And that was just kind of, I anticipated Netflix to miss. I mean, a ton of people made tons of great and amazing money on Netflix puts, but it was a crazy move down. So it was a hard bet to make on Netflix that they would miss to the point that your puts would go. But it was a pretty easy bet to make on Roku that if Netflix, another streaming service, missed, it would go down. And you could have done the same thing with Disney with the miss, and then it went down. And what made Roku a little bit easier for us is on Thursday, we already were able to lock in 50%, already up to over 5 by the close. You were able to really protect yourself into the earnings. So by being able to sell into the earnings, you don't have to like sweat it out. Like a lot of people who are buying those Netflix puts into the earnings call, Netflix puts in the earnings call, those puts were only up a few percentage points. If it didn't go their way, they were likely to lose more than our initial investment. But the way we did it is we got in near the top on that repeating high, which you can go over and look at the supply and demand zone video on my YouTube and just kind of understand those repeating tops and ride the wave down and reduce our initial investment. So we had that protection. No matter what, Netflix could have guided up, had an amazing quarter, and our puts would have went to zero, but we still would have made money on it. And that's kind of what makes it so you can hold for these huge moves. So what happened the next day is we get that gap down. I sold all but one at the open. See my little minion drop here. that 1 to 10, so 10x the original contract price, which is pretty crazy. We had that last week, so we had over 1,000% play last week with Lululemon puts, and then another 1,000+% play this week with Roku. So the volatility is out there in the market right now to make this money. You just have to make sure you're making informed decisions when you're doing it. People who followed me a long time on Twitter knows that I'm probably one of the biggest bulls out there, but when the conditions aren't right for it, it's not right for it. So there'll be opportunities to buy calls back up. There'll also be opportunities to ride the puts down. You just have to be dynamic. You have to be ready for what comes. So that sell I thought might have been the bottom down here in the morning, but it kept bleeding down, and those puts actually went all the way up to 18 plus. The low was 151.5. So if you held all the way to the end of the day, you could have took your $100 to $1,800 per contract, which is just insane. Excuse me. But it's all about what you're comfortable with holding, losing, risking, what you think is going to go into the market. And once you can do that capital reduction where you're playing with house money, where if you lose it, you still walk away from the trade free. That's how you can really hold for these huge percent gains, is you take the emotions out of the equation and you just trade what you see in front of you. So with that, I hope this video helped explain to you kind of what I was looking at with Roku, what factors were going into play. And with that, got another week ahead of us, and I'll see you out there.